Bosh! How's it going, everybody? My name's TradeX, this is my trading den, and today we're going to cover the much anticipated episode on smart money techniques. We're going to cover my 3 strategies for finding amazing entries, and we're going to do that by first looking at range trading, so looking at market structure shifts across a wide range. That's number 1. Number 2 will be higher time frame PD array divergences. And the third is going to be lower time frame entries. Now guys, if you find value in this video at the end, please do consider smashing the like and subscribe. It does the channel a world of good and helps other viewers like yourself view this content. So without further ado, let's get the intro rolling and then we'll get straight into the good stuff. See you soon. How's it going, everybody? So for those of you who've been following my ICT series for a while on YouTube, you'll know that I have a certain way that I like to present, and today is going to be no different. Alright, we're going to look at some slides and break down the fundamentals of SMT, then we're going to jump into some PowerPoints and look at my 3 strategies in more detail and break down how they look, and then at the end we're going to jump into some actual charts so you can see how they look, and by the end of this video you'll know exactly how I personally use SMT and my 3 strategies so you can start implementing it for yourself. Without further ado, let's jump into the first slide. What does actually SMT stand for? Break that down before we move forward, right? We'll break down the fundamentals, then we'll start breaking it down piece by piece. SMT, I don't even think Michael fully knows why he chose SMT. It was smart money and he wanted to throw a T on it, but he didn't know what to call the T, so he just put techniques on it. But ultimately what it is, it's used as a relative strength indicator. Now, it's not the relative strength indicator that you might think if you're a historic retail trader. It's not those lines looking for crossovers that you can just get an indicator for. No, I mean, this is a specific relative strength indicator looking at the various indices, and we'll break those down in a second, but we're looking for divergences between those. What we're looking to do is we're looking for the divergences to provide the context as to whether the overall market is strong or weak. And the indices that we're specifically looking at are ES, NQ and YM. And you'll see how I break down my charts and set up my charts so it's easy viewing. But just for now, just know ES, NQ and YM are what we are tracking for relative strength across the market. Relative strength or relative weakness, okay? Now, just to throw it in there, ES is predominantly holding the blue chips, okay? NQ is predominantly holding the tech stocks and YM is predominantly holding industrial. So what we're looking for is divergences between these sectors and looking for relative strength. So ideally, me personally, I like to see divergences between blue chip and tech. And then I'm waiting for that naughty child, which is usually YM, to see which brother or sister he wants to chill out with on that specific day. So for example, if we have ES diverging from NQ, but YM is with ES, I will be looking at that as the overall directional strength or weakness in the market, okay? So now we've done that, let's jump into my first strategy, and my first strategy is going to be range market structure shifts. Now what I'm looking for is a wide range, say 10 to 15 hours, maybe up to 20 hours, something like that. And the reason being is that over a wide period of time, when we have clear lines of support and resistance, so swing lows, swing highs, they are a lot more respected on a higher time frame, so a wider period of time. If we drop down to a 30-second chart, we're always going to see slight deviations and divergences between the indices. However, over a large period of time, we can take a lot more context from where the market currently is and how it's behaving given those wider, longer, higher time frame swing lows and swing highs, okay? So I'm waiting for the lagging indicator to catch up. Now if I'm with ES and YM and the market is dropping lower, I can stay in my trade knowing that NQ has got to catch up to take those swing lows. On the other side, if I'm not in a trade, I can take the trade on NQ waiting for it to come and take those lows. So that is how I'd be using a swing low pivot to be broken using divergences across using SMT. Now let's jump into the slides and have a look at how that looks in more detail. So here you can see how I personally break down my charts, okay? I like to personally stack them. And so I have ES at the top, NQ in the middle, and YM at the bottom. And what they are all doing is they are all tracked by time. And this example is a 5-minute chart, and the range is about 10 to 15 hours, okay? And what I'm looking for in this strategy, which is my range market structure shift divergence, is I'm looking for very clear swing lows and swing highs, okay? And I'm looking for divergences, as mentioned previously, between ES and NQ, and I'm looking to see where YM, that naughty child, is, and which brother or sister he's wanting to chill out with that afternoon, okay? And for those of you who are in red pill trading or have followed me on Twitter, you'll know that I actually took 25 handles, I think it was on Thursday, on Friday, using this exact strategy. And I'll show you why. So I was in ES in a premium, and I took my entry in a premium on a PD array, looking to draw down and take those lows, which was in a discount. So I was targeting a PD array in a discount below these lows, okay? And you can see here that both YM and ES were both in simultaneously heavy and moving down towards to take out those lows, whereas NQ was holding, right? So up until that period of time, you can see that we had complete confluence between the indices. So the relative strength or weakness was on parity. It was on par. There was no SMT, there was no divergence. However, when price decided to move bearish, we could see that we had a very, very clear divergence in the sector, across the indices, sorry. So I entered here with YM heading lower. NQ was that one which was sat on the fence. So it gave me the confidence to stay in my trade, right, waiting for it to reach this PD array because I'd already swept the lows, because I was waiting for NQ to come and take its lows. It had to come and fulfill its objective by taking the lows, okay, because the overall market sentiment was weak, okay. That is what gave me the confidence to stay in my trade for 25 handles, simply on the basis that NQ still hadn't come and achieved its objective of taking those relative equal lows. Okay, that was one example using range market structure shift. However, this actual setup here gives another example of how we can parlay into a position looking for a deeper discount or take a second entry short. And it's where price has come back and retested that swing low with across YM and ES. You can see how they both come and retest that swing low. However, NQ just crashed through, and it didn't even want to come back and retest that swing low. This is again providing huge context that the overall sentiment in the market is weak. So if you see this in your setups and you see this on your charts, and you're seeing retests across two, not wanting to punch back through, whilst the other one is crashing through, this is giving you an indication that price is heavy and it's wanting to move in one direction, and in this instance it's lower into a deeper discount PD array. So let's jump into the live charts and see how that looks in practice. Okay guys, we're in the live charts and you can see how I've stacked them. So you can see that we have ES at the top, we have NQ in the middle, and then we have YM at the bottom. And this is essentially what I just showed you in the previous charts, but now we're in live examples. So this is the trade I took last week, and let's break it down. You can see that this whole piece here, and we're going to break down three different entry techniques here using my market structure shift divergence over a wider time frame, over a wide range, okay? And this is the first section, then we'll look at this section, then we'll look at this section. But firstly, we're going to look at this, and this is the trade I took. I was in here short with ES because I was looking to reach a lower time frame discount PD array, okay? And I was looking at this very clear line in the sand, and price had shown heaviness with both YM and ES. But look where NQ was at the same time. NQ was here. NQ hadn't even come down and touched that line. So for me, I was waiting and I was short, happily knowing that NQ had to play catch up, all right? And when price broke through here, you could still see when it retested where NQ was. NQ still hadn't come and broken through. So it gave me the confidence to stay in my trade that price was heavy, looking to reach that discount PD array. Why? Because NQ had to come and fulfill its objectives of taking its swing lows, all right? So you can see here when price had come up and retested, NQ was still here. Once it broke, they all crashed, right? And they ultimately came and took their discount PD arrays. But that should help you in understanding how I use it by looking for that lagging indice to play catch up when the other two are showing serious weakness or strength, using very, very clear lines of the sands, swing highs and swing lows. Now, let's look at the second piece of price action. So the second piece of price action takes place here, okay? And we're going to look at ES and YM. And you can see ES and YM are both below this very, very clear swing low across this wider range. But where is NQ? NQ is retesting it. Now, if ES and YM come back and are retesting this very, very clear swing low and are not breaking through, what is that indicating? It's indicating huge weakness within the sectors, and that price is wanting to run into a deeper discount and take out relative equal lows in a deeper discount. In this instance, it was the sell side below these swing lows, okay? And so you could have done this in one or two ways. You could have shorted NQ up here, right? Knowing that it had to come down and play catch up with the other two, or you could have entered here on ES and YM, when it came back and retested that swing low, once you saw that it was failing, and you could have taken an entry off an order block or fair value gap, whatever it may have been, in order to run down into that deeper discount to a PD array. Now, the third thing to note is they all had an ultimate objective, and their ultimate objective was to run down into a deeper PD array and sweep out liquidity below an old low. And here it was the sell side below these lows as previously mentioned. And you can see IM, and ES both did it here at around 8:13. Okay, they'd already come down and swept. In fact, it's actually early now. It's about 6:15. Okay, around 6 a.m. But look where NQ is. NQ is still here. So you can stay here waiting for NQ to come and fulfill its objective, which is taking that sell side. So they've all then in confluence with one another in terms of taking the liquidity below the old low. And as soon as they all do that, look what happens in the marketplace. We then get price returning, wanting to run into a premium to go and search for inefficiencies in price or go and sweep liquidity above old highs. And you can see that price then rallied higher and higher, ultimately fulfilling that objective, in which in this instance on Friday was to go and pin that 4,000. We also have numerous instances here where price was showing strength where NQ was still playing catch up. And so you could have, in this instance, so let's take this example here at 117, is when you saw ES and YM retest this level and move higher, and look at where NQ was. NQ was still below. So if you had entered here, you could have entered and held until the point in which NQ had broken through that level, because it had to play catch up. And so if you got in here at, say, 70 and held all the way to 87, that's the point in which NQ breaks through that level. And so you would have taken, almost 20 handles just on the premise of holding and waiting for that lagging indicator to catch up. So guys, I hope that clears up that strategy for you. That's my market structure shift over a wide range using divergences and smart money techniques, okay? We're looking for very, very clear swing highs and swing lows across a wide range. We are then looking for either ES and YM or NQ and YM to show relative strength or weakness and break those levels. We're then looking to see and wait for the lagging indice to play catch up and fulfill its objectives, and we can therefore hold in our trades if we're on the side of the two that are either strong or weak, waiting for that other one to play catch up. It gives you strength and confidence knowing that you can hold your trade. And then once they have all fulfilled their objective and played catch up, you can then look at market structure shifts and price reversing from a premium to a discount or a discount to premium. Now guys, that is kind of complex, and I get it, but hopefully that clears it up. So if you have any questions, feel free to drop it in the comments. But without further ado, let's jump into number 2 of my strategies, which is higher time frame PD arrays and looking at the divergences between those. So let's jump into that. Okay, everybody, so this is number 2, this is strategy number 2, and it's higher time frame PD array divergence, okay? And we're going to look at it exactly the same way. We're going to go into some slides and we'll jump into some live chart examples and we'll get this one completely boxed off, all right? So we're looking for divergences between ES and NQ, with YM being the decider. So the YM being the odd one out and deciding which brother or sister it wants to chill out with again, okay? That's the first thing we're looking for. We're waiting to see if one is going to fulfill its objectives. If we are looking for price to run into a deeper premium, and say, for example, 2 are reluctant to get there, but 1 has, we can use that as a reference point that price is going to then run lower if we are heavy, okay, because 1 has fulfilled its objective. There's 2 ways of trading this. You can either trade the one which is strong when the other 2 are weak, waiting for the strongest one to then catch up, or you can hold your position in the ones which you're in if you are short when they're heavy, okay? And we'll break that down if it sounds confusing, so don't worry. But we are ideally waiting for that lagging indicator to play catch up, and that's personally how I like to trade them. So let's have a look. This is an example again, and we can see that we have them stacked. We have them stacked again, and we have ES at the top, we have NQ in the middle, and we have YM on the bottom, all right? And what we have here is we have a higher time frame PD array. In this instance, we're going to call it a fair value gap in a premium, all right? But you can see with ES and YM are failing to reach that premium fair value gap. That is indicating that the overall market sentiment is what? It's weak, right? But we can see here that NQ has come and fulfilled that fair value gap, right? This is showing that one of the 3 has fulfilled it, but the overall market sentiment is weak. So what we can do is one of 2 things. We can either short these, right? Or we can short NQ when it's reached that premium fair value gap. In this instance, I would be looking to short NQ. Why? Because ES and YM are showing a reluctance to reach that higher time frame PD array, that higher time frame premium. Now, this is giving you the indication that market is weak, and you can keep a very, very tight stop on NQ because NQ is in that premium fair value gap already, so you wouldn't want to see it punch higher, especially if ES and YM are still below and have potential to catch up, right? That is going to break it down in this side. Let's jump into some live examples and so you guys can get a better understanding of what I mean. We are again in the live charts, and we're going to start with ES, but we'll look at YM, and we're also going to look at NQ. And what we're looking for is divergences across the three to show relative strength or weakness. Okay, so here we are with ES, and what we're looking at is a displacement leg here, and we're looking at this fair value gap at 12 o'clock, which is inside a premium of that range. Okay, on its own it means nothing, but what we can see on Friday is that Friday's price action shows an unwillingness to reach up into that premium. It's a hint that price is what? It's a hint that price is weakness, but on its own it means nothing. Let's get further confluence and look at SMT across the indices. Let's start with YM, because as we know, we want YM to pick a side, right? And so YM is doing the exact same. On Friday, it's showing an unwillingness to run into that 12 o'clock premium PD array, which in this instance is that fair value gap, all right? Now, again, on its own, that means nothing. Price could still be looking to run up and reach that higher time frame PD array. So let's have a look at NQ. What is NQ done and doing? NQ has actually acted out of character in the sense of being different from the overall market sentiment, which is weak, and it is pumped up into that 12 o'clock PD array fair value gap. Now, in this instance, this would be an example where I would want to short NQ. Why? Because the overall market sentiment is weak. ES and YM are failing to reach that higher time frame PD array, showing weakness. NQ, on the other hand, has run up into that premium, and this is where you'd want to go short in order for it to then play catch up with the other indices. I'll be looking for my entry models, whether it's a 2022 model, whether it's an entry of an order block, fair value gap, whatever it may be. You are looking for entries then to go short. Why? Because the overall market sentiment is weak, and this is using a higher time frame PD array in a premium or a discount to achieve that. And this is showing that both ES is failing, YM is failing, but NQ has reached it. This enables you to frame low risk entries because you would not want to see price move above this premium fair value gap if the other two are showing weakness. It gives you a low risk, high probable entry that price is going to run lower. Guys, that's going to cover higher time frame PD array SMT, strategy number 2. So let's jump into number 3, which is lower time frame entries using SMT. This is number 3. This is the last and final one. This lower time frame entry divergences. Okay, looking for is a divergence on the 1 minute chart. We're wanting either ES or YM or NQ and YM to show signs of relative strength or weakness. Okay, and then we are looking to trade the one which is lagging to take in the direction of the other two, or we're looking to hold the other two in the direction of the strength or weakness. Okay, we're going to break that down again in an example, but it's very similar to the other two, right? And we are wanting to see a nice clear divergence. Okay, so me specifically, I don't like it on a sort of 30 seconds chart where, you know, personally for me, it just chops around too much. So 1 minute is the lowest I'll go, and I like to look at it over at least a 10 to 15 minute window, not literally candle to candle. That's as low as I personally go, but you know, other traders may say different. Let's have a quick look at what this looks like. Again, we have a stacked chart. We have both ES, NQ, and YM on top of each other. And we can see here that we have both ES and YM showing an unwillingness to go lower, whereas NQ is showing that it's wanting to reach down and purge its lows. Now, this is an example where you could take NQ long, right? Because the other two are showing relative strength, and you're waiting for it to play catch up. The other side of the coin is you could literally just hold ES if you're in a trade. So you got down here, and you're concerned about the lows being swept. You could just stay in it, and on the basis that YM is showing equal strength and NQ has already purged its lows, or has purged its lows, so that will give you confidence that price is likely to move higher. We can see here that price eventually catches up. This is ES, and we can how I would like to frame this is, because you can see we're in the middle of a range here. We don't know whether price is going to draw up into a higher time frame PD array or run lower. Now, we can frame many reasons. We can say that we've swept the sell side here and we've got a higher time frame premium that we're running to, and have 80% of the argument to say that price is going to move higher. But how can we use SMT to provide further confidence? This is how we do it. S is showing an unwillingness to run down into and sweep these lows. Okay, it's showing strength. Let's have a look at YM. YM is doing the same. YM is not even wanting to run into consequential encroachment of this BISI, this buy side imbalance, sell side efficiency inside this displacement leg. So let's have a look at NQ. NQ is just doing its own thing. NQ has come down, it's gone punched through that inefficiency, and it's actually come to purchase some on the sell side. You could play this is you could literally play NQ long because the other two are showing strength, all right? And in an instance where I would play NQ long, or if I was in ES or YM, I would hold, and I would hold on the basis that NQ is going to catch up. So guys, that is going to cover absolutely everything there is to know about SMT and how I personally trade it. It's covered my 3 strategies, so you guys should now know exactly how I trade SMT, so you can start applying it for yourself in your own trades. Now guys, as always, if you found value, do please consider smashing like and subscribe. It does the channel a world of good, right? And sharing is caring. As always guys, until next time, trade safe, trade smart, and if you do decide to join Red Pill, then it'll be amazing, and I look forward to seeing you on the other side. But until then, trade safe, trade smart, and take care.